Everything you need to know about FinTech's latest innovations. FinTech, combining the concepts of financial and technology, uses new technological innovations for financial goods and services. Our video will explain what FinTech is and how it's used. Whether you're a customer, a future FinTech business owner, or someone who sees potential in FinTech for their existing business, the main thing we can advise is to be agile. The transaction value for the global digital payments market is projected to be worth $11.29 trillion by 2026. At the same time, the global FinTech market is projected to reach $305.7 billion by 2023. So, what is FinTech and how does FinTech work? And what are the best practices for building a FinTech company? In this video, we'll answer all these questions and discover examples of FinTech and the critical things to consider to build a successful FinTech business. For the best and latest blockchain technologies, crypto, and finance videos, make sure you subscribe to this channel and hit the bell icon to be the first to get the latest updates and news. What is FinTech? The concept FinTech, which combines the terms financial and technology, refers to companies that use technology to improve or automate financial services and operations. The term refers to a fast-expanding industry that serves the interest of consumers and corporations in various ways. FinTech offers a seemingly limitless and wide range of users, from mobile banking and insurance to cryptocurrency and investing apps. Today, the FinTech industry is enormous, and if recent venture capital investments in FinTech startups, which reached an all-time high in 2021, can be considered a vote of confidence, the industry will continue to expand for years to come. One driving factor is that many traditional banks are supporters and adopters of the new FinTech innovations, actively investing in FinTech, acquiring the latest technologies, partnering with FinTech startups. Those are ways for established banking institutions to give digitally minded customers what they want while also moving the industry forward and staying relevant. How does FinTech work? Financial technology services and goods differ in their inner workings. Machine learning algorithms, blockchain technology, and data science are used in some of the most recent innovations to accomplish everything from processing credit risks to operating hedge funds. There's even a subset of regulatory technology known as RegTech, which is meant to help businesses such as FinTech. FinTech handles the complex world of compliance and regulatory challenges. Concerns about cybersecurity in the FinTech business have increased as the industry has evolved. The tremendous global expansion of FinTech startups and marketplaces has increased the exposure of vulnerabilities in FinTech infrastructure, making it a target for cybercriminals. Fortunately, technology constantly evolves to reduce existing fraud risks and counter new threats. The evolution of FinTech. FinTech has been around for far longer than most people know. While the most current form of FinTech allows you to pay for coffee using a smartphone app, FinTech could be traced back to the late 1950s or around 70 years ago, according to U.S. News and World Report. Following the advent of the credit card, financial technology improved and introduced other significant market milestones, such as ATMs and online stock exchanges. Each new piece of technology enhances financial services that most people use daily, but rarely think about. Today, as more services transition to a new technological paradigm, such as utilizing a mobile wallet instead of traditional credit cards, FinTech solutions are becoming a real threat to the traditional financial infrastructure. The advantages of FinTech. FinTech makes financial services and transactions easier and cheaper for individuals and businesses. It can also refer to companies and services that use artificial intelligence, big data, and blockchain technology to conduct highly secure transactions within an internal network. FinTech attempts to simplify the transaction process by removing potentially superfluous stages for all parties involved. For example, a smartphone wallet app lets you pay others anytime by sending funds directly to their bank account. If you paid with a check or cash, the receiver must go to the bank or deposit the funds. Best practices for building a FinTech company. The advent of banking as a service (BaaS) tools has significantly lowered the barrier to entry for founders to build new FinTech companies or for businesses to embed financial services into their existing offerings. This allows companies to integrate financial services into their product experience, drastically reducing the development effort, product complexity, and regulatory burdens of offering loans, financial accounts, and card services and products. With technology making it easier to build a fintech company, there has been a surge of new companies and products entering the market, all aiming to offer financial services tailored to different users' needs. However, while BaaS has reduced the overhead and complexity of building a fintech, software development and engineering are only one piece of the puzzle of building a new fintech business. Founders must also consider product market fit, monetization strategies, customer acquisition strategies, and more. This video section outlines some of the steps and best practices for businesses looking to build a successful fintech, focusing on fintech that offers financial accounts and cards. We paired our internal knowledge with insights from fintech startups to help you design, build, and grow your business. Examples of fintech. There are many everyday examples of financial technology applications today. Here are some popular ones. Mobile wallets. Mobile wallets and payment applications are two of the most common types of fintech. Famous examples such as PayPal, Venmo, Apple Pay, and Google Pay enable peers to send money to one another and would allow retailers to accept client payments. Crowdfunding platforms. Crowdfunding sites have challenged traditional financial sources by allowing consumers to invest in businesses, goods, and individuals. Stock trading apps. Stock trading applications have become well-known and creative examples of fintech. Instead of visiting a stockbroker, investors may trade stocks from anywhere using their mobile devices. As technology improves in the 21st century with advances in data usage and artificial intelligence, the future possibilities for fintech are exciting. Financial services will become easier to access and use as they become better tailored for everyday use. Becoming the primary banking relationship with users. These fintechs aim to be the primary banking relationship for their customers, supplanting their existing banking relationships, if any. These businesses generally need to offer a wide range of financial offerings that meet a user's financial needs, including checking and savings accounts, credit and debit cards, loans, and more. Building a fintech point solution. Point solution fintechs focus on solving a targeted problem or a need in financial services, differentiating their offerings against existing offerings in some particular manner. Examples include making it easier to send money via remittances, increasing accessibility to capital via loans, enabling corporate expense management via cards, and more. Developing financial infrastructure. These businesses improve and solve pain points with existing financial services infrastructure for other fintech businesses, from providing compliance and security capabilities to payments and financial services infrastructure. Stripe is an example of economic infrastructure business. 4 critical things to consider to build a successful fintech. We studied several fintech startups to learn how they identified and monetized their product offerings, built their technology infrastructure, and acquired their first customers. Here we highlight their insights and experiences and share the critical questions for your business to consider based on their journey. Number 1. Identify a high need and underserved audience. Traditional banks and financial institutions typically build public offerings for the entire market, as opposed to building products tailored for a specific audience. As a result, many undeserved audiences can't easily access the financial services they need or leverage solutions tailored to their business needs. For example, only 48% of small businesses have access to all the financing they require, and 33% of companies were denied a line of credit because financial institutions determined that they didn't have a good credit history or were too new. Identifying high need and undeserved customers like these creates opportunities for your fintech to pursue and solve substantial problems. Critical questions to answer. Who is my target audience? How big is this market or opportunity? What do my potential customers currently use for financial services? What are the economic pain points today? Where do they now experience friction? Number 2. Solicit customer feedback to inform your product roadmap. As you build your core product, it's essential to understand your target audience deeply. However, learning your potential customers' pain points isn't always enough to help you make the best fintech offering. Sending surveys and creating personas have value, but often, especially when starting, The best course of action is to talk directly to customers to find out what they want you to build. Critical questions to answer. How does my fintech offering solve my target users' pain points? How can my project offer an improvement over their existing financial services? Have I talked with potential users about my idea? Have I tested the idea with users? What do users like and not like about my opinion? Is there anything they think is missing? Number 3, diversify your revenue. Fintechs, like all other businesses, need to be profitable or have a clear path to profitability. Depending on the type of fintech businesses you're building, there are a variety of monetization levels available to control. Critical questions to answer. How can I monetize my offering in the long term? What monetization levers could I leverage? What conditions and requirements are necessary for me to monetize my offering successfully? What does the unit economics of my business look like? Number 4, decide what infrastructure you're building on. A fintech doesn't need to own its financial infrastructure or technology, though it can certainly choose to do so. Most fintechs use a BaaS solution to help them build and go to market more quickly and easily. BaaS providers act as an intermediary between fintech businesses and banks, providing the underlying infrastructure for fintechs to develop their financial products. Critical questions to answer. Do they offer the capabilities I need today and those I might need in the future? Are they an established business in the fintech space? What other fintechs have they supported? Do you have expertise in fintechs, in compliance, in risk management, and fraud prevention? What level of support can they provide for my business? Fintechs play an essential role in revolutionizing the credit ecosystem by creating alternative lending channels that offer significant advantages to both banks and borrowers. Fintechs create seamless customer onboarding and credit disbursement processes with tech-enabled, mobile-friendly platforms that can replace physical interactions with remote loan applications. And it looks like even the traditional institutions are coming to peace because technology is winning over the financial sector. Thank you for taking the time to watch this video. Don't forget to smash the like button and subscribe to be the first to watch the following videos. And for more blockchain, crypto, Web3, NFT, and finance updates and news.